Hi, everybody. My name is Dr. Kevin B. Heather, and I'm the Chief Geological Officer and qualified person for Aldebaran Resources, a junior exploration company listed on the Toronto Venture Exchange. And we have the large Altar Porphyry project in San Juan province in Argentina. And my colleagues and friends know me as the Rock Doctor. And so if I start talking about rocks passionately, you'll know why.
Kevin, very good to see you again. I must kick myself in the shin not to talk about rocks too much. And I think the two of us could go down a rabbit hole talking about technical aspects, but let's try and keep it high level. Good to see you again. We haven't spoken for a year or two. You've just published a new mineral resource on the Altar project. The prior one was 3 years ago in 2021. Tell us what's different between that one and this one.
Well, obviously the fundamental change is it's much bigger. Grades have more or less stayed the same, but we've increased the measured and indicated tons by 100%, and the inferred tons by well over 500%. And so it's a real significant, and I think really to put it into context for your listeners is, we already had a very large project when we took over the project. There was roughly, 11 billion pounds of copper in the measured and indicated categories, and another 1.8 billion pounds of copper in the inferred categories.
In 2018. In 2018,
in 2021, but
okay.
That resource was based on historical drilling.
Okay.
So, right. So,
Okay.
and now we're sitting at, in the measured and indicated, 22 billion pounds of copper. And in the inferred category, another, I believe it's like 9.8 billion pounds of copper. So you're looking at an ore body now, just with copper, not copper equivalent, of well over 30 billion pounds of copper. And to put that into some context for people, major companies typically want to see projects that reach the 10 billion pound threshold. So we were already, with our 13 billion pounds of copper from the previous resource in 2021, on companies' radar. Now, with more than doubling the contained copper pounds, not to mention the gold and the silver, which also substantially increased, we're clearly within, probably, I would guess, the top 5 undeveloped copper gold projects in the world that are in the hands of junior. And that's really important, because the end game here is that we're not mine builders. We don't claim to be mine builders. Our business model is find assets that might be underappreciated or undervalued and add the value, and then sell those on to a major mining company, and like we did previously with Antares Minerals and our Hikura project in Peru. And so that's the business model. And I think we've demonstrated that we've added significant tons and metal in the ground to the Altar project, to where now it's not only just on the radar, it's one of the biggest undeveloped copper projects in the world, right at about the time when everybody believes that, copper is going to reach a crisis here in terms of supply. And so we'd be delivering a project into the market, I think, right at the opportune time, within a jurisdiction in Argentina that's completely done a 180 over the last 3 years.
Kevin, lots to unpack there. And I mean, right off the top, both you and I are true believers in copper and the fundamentals of the supply and demand curve, and the need for the junior companies to deliver these economic and commercial resources. Just in terms of the way to go forwards and continuing to grow value within Aldebaran, you've got 2.4 billion tons in the measured and indicated categories, and you've got 1.2 billion ton in the inferred category, and you're just launching a 25,000 meter drill program. Are you going to be taking that inferred? How much of that effort is going into taking that inferred into the M&I category? Because you've already got quite a lot of M&I.
Yes, and that's actually a good observation, Merlin. In terms of moving forward to the PEA, Most of the mineralization that we have is close to surface, and that would be in an initial potential mine plan is already in the measured and indicated category. So that means we can transition pretty quickly between the PEA, where you can use inferred resources along with your measured and indicated, to the PFS, where you can only use measured and indicated. So the 25,000 meter number really comes from, because we're involved with Riotinto Newton, and I'm sure we can discuss that a little bit later on in the interview. But the focus right now is to drill large diameter holes in key places to collect enough sample. We're currently with Riotinto Newton doing phase 1 test work. We have small 1 meter columns that are set up, and they've just started working. We don't have any results back from that yet. But the idea is that both Rio Tinto and ourselves feel confident that the technology will work. And so we're already starting to collect sample for the phase 2. And what that'll involve is actually constructing 10-meter high columns. 10 meters because that's the typical lift height on a heap leach pad. And so this will be to simulate what a true 10-meter lift would look like. And so we need large diameter core in order to get the tonnage of material we need to fill those columns. So that's what the first phase of drilling is really focused on between now and Christmas. And then after, to get directly to your question, then we'll turn the drills and start focusing on filling in gaps that we've see in the resource model, especially any gaps where they're up in the upper part, which would be the early cash flow part of the mine life. And also, like you alluded to, we also be looking at places where, because we know we want to move to a PFS, we will be looking for critical places where we need to convert inferred resources to indicated in order for them to come along for the ride and subsequent economic analysis in the PFS stage. We've just really literally put out the resource on Monday, and we're internally just starting to dissect the model and start to look and see where we need to do that infill drilling specifically. But and so that's really the first two components that have the highest priority. But we also, because we're moving to the PFS, there's a lot of stuff that, again, for the market might not seem sexy, but it's actually critical to the value and potential of the project. And that's doing things like geotechnical drilling. So we have to do a lot of geotechnical drilling, and also water tests, pump tests to understand what the pit dewatering, things like of that nature. And then, frankly, if as a lowest priority is then trying to convert some of the waste material that currently exists to potentially mineralization, because that opportunity does present itself. More mineralization we don't need, but what we're really focused on is to try to make the PFS as robust as possible. So we want to try to make sure we're taking as much of the big resource we have to the PFS with us.
And do you have any condemnation drilling as well in that mix? You know, looking for places
at this stage, no. For the PEA, we don't need condemnation drilling. So I think what will fall out is that probably not this field season, but potentially next field season would be when we would be pushing hard to get to the PFS. And that's where we may be required to do some condemnation drilling in areas of potential heap leach pits, heap leach pads, or potential tailings facilities, et cetera, et cetera, et cetera. So I think that's a little bit out in the future.
Thank you. And I've realized I've done exactly what I said I wouldn't do, which is just dive straight into the technical. Let's. But
I think it's important that investors understand that there's a lot of there's a lot of components that go into a successful project. That we're not a company that's trying to jack the share price up on drill intercepts. I mean, if we get good drill intercepts, great. But the end game for us is the monetization of the asset. And I mean, if people go and look at our past company and a recent graph that we put in a webinar that we did yesterday that shows our current share profile relative to our previous company that we sold for 650 million US, they'll see that the real gain is starting now.
Ah, good sales pitch.
And all the sexy drill holes are speed bumps.
Well, companies respond to drill holes in their early evolution, and when your market capitalization is $20 or $50 or $100 million, when you put out a stellar intersection, that's when you can get some leverage, and off a low base, you can get multiples of share price performance through exploration results. But that doesn't detract from the longer game that you want. A company will evolve from reporting sexy drill results into delivering longer term value, and you're in that longer term value phase for sure.
Yeah.
That brings us neatly to a kind of an architectural point that we can just interject now, which is to talk about the Newton deal. You've got that nice presentation on your website, which is only 10 slides long, which I really admire. It might even be 9 slides long, just showing what the
with simple graphics that even I can understand.
Simple graphics, just kind of building blocks. This is what the company looks like today. This is what the Newton joint venture brings, and that's the way that the company ownership will look on a pro forma basis 3 years down the line, 2.5 years down the line, 2 years down the line, whatever it is. Could you just talk us through that Newton deal and what the steps could be if Newton continue to exercise their options, please?
Yes. So the deal fundamentally is upon signing, basically it's a deal that's an option for Riotinto to earn into 20% of the asset of Altar. And in order to do that, they need to pay us $250 million US. So that's an implied value of the project of $1.25 billion US. But in order to do that,
and of your 60% of $750 million versus 260 today.
Right. So
sorry for the interruption.
Yeah. So they've already paid us $10 million US upon signing of that agreement. The next option payment will be on delivery of the updated mineral resource that was delivered on Monday. They have 20 business days to decide if they want to exercise their option, which will be paying us an additional $20 million US. I assume that they will exercise that option, but we'll wait and see. And then the next option payment will be on delivery of a preliminary economic assessment, a PEA, at the end of Q2 2025. And that will make another $30 million US payment at that point. If they stop anywhere along the line of that, they earn zero and we keep the cash. The next major option payment will be on delivery of a pre-feasibility study, a PFS, at the end of the 2026. Upon delivery of that PFS, they will need to pay the final option payment of $190 million US in order to actually gain their 20%. If they stop anywhere before that final payment, they earn zero and we keep the cash.
And if they make that final investment, they exercise the option, they pay you $190 million, that $190 million should take you through feasibility study.
Correct. Yeah, that would probably take us through feasibility. And it may even take us beyond that as well. But yeah, we'll see.
And so the pro forma, looking kind of long term, looking to early 2027, late 2026, you've handed in your, it feels like homework. You've completed your pre-feasibility study. Let's say they've completed the option. At that point, Newton, which is a subsidiary of Riotinto, would have 20%. Sibanye-Stillwater would have 20%, and you would have 60%. And
Correct.
is everybody a contributing funder from that point onwards?
Yeah, again, that the way it would, yes, the way it would be structured right now. So let's back up a little bit. We've our option agreement with Sibanye-Stillwater is such that we can earn into 80%. We've actually accomplished this spend in order to get to our 80% earn in. We haven't officially announced it yet because it's with the auditors and they're just making sure that, you know, everything's kosher. We've gone well past what we needed to spend to get to 80%. So once that's been accredited by the auditors, then there'll be a JV form that'll be 80% Aldebaran and 20% Sibanye at all costs, and there's quite a bit of accrued costs already. Sibanye will have to pay their 20% of those costs, and if they elect not to do so, then their 20% will dilute. So there is a scenario where they might dilute out completely, but I don't think that will happen. But there is a scenario. So the pro forma, if Rio Tinto goes through to the end of their option, would be like you said, 60 Aldebaran, 20 Sibanye, and 20 Rio. But that 20-60 between us, that could look different. We could have more, and Sibanye could have less if they opt not to continue.
Yeah, gotcha.
Right, and then just after that, then it would be 60 20 20 if that was the way it sort of fell out at the end in terms of the spend moving forward. Our portion, we would have that money because of the option.
Got it. Now moving to the kind of the resource itself. It's a comprehensive table I've got here. Looking through it, I can see that you've got in the supergene and the mixed, you've got about 330 million tons. Let's call it of kind of roughly leachable material sitting in the kind of the oxide or the mixed zones. And you've got 2 billion tons with another billion tons of kind of inferred behind that of the hypogene, which is kind of the sulfides. In your mineralogical mix at Altai, you've got enargite, which is a arsenic copper sulfide, which has got some tricky metallurgical characteristics. So when I look at it, I can see the 300 million tons or 330 million tons that you can leach, and you can have a heap leach and an SXEW, and I can see that that's a commercial prospect in itself. And I can see the sense of Newton coming in because they've got this funky leach process which may be able to leach the 2 billion tons of your hypogene. Is that what have I got it kind of roughly right? You've got kind of 15% or 12% in the leachable category and
traditional leachable category.
And 85 to 87% of your resource is more challenging metallurgically.
It's not that it's challenging metallurgically. The recoveries are very good, and all the flotation work that previous operators of the project did, and there's a lot of metallurgical test work that's been done. The copper floats fine. The issue is that you're going to produce a concentrate that has arsenic and will be subject to penalties. Okay. Right. And so if you actually look at the resource that we just put out, it was a resource that was based on a concentrate, float, pay arsenic penalties. That was the basis of the resource. Okay.
I saw that note, and I wonder, can you? It said, and I'm not sure if I got this right, but it said that you'd pay a penalty of like 70 cents per pound of copper.
That's not the 70 cent. That's not all penalties. That's the all-in cost of penalties, transport, and a bunch of other things. So unfortunately, when the IMC did the notes, it was just kind of thrown in there without much explanation. But in the technical report that will come out in early January, that will be explained. We've had numerous people come to us and go, "Wow, that's really high," but it includes a lot of stuff: freight, transport. So
and obviously, if you think that The incentive price for copper, we're currently trading at around $4 a pound at the moment. And, what is the incentive price? Is it $10 a pound? Is it 12? Is it 15? In the longer term, that 72 cents becomes a smaller proportion of a higher.
Yeah, but presumably, yeah. I mean, there's a whole bunch of factors, and that's part of the problem, Merlin. I'm an economic geologist, but I'm not an economist, right? And I think that's where, as an industry, sometimes we get really wrapped up in NPVs and IRRs, and the problem with a lot of these big copper projects is they go for 50 to 100 years. And so way beyond where you can actually calculate any value. And so that's part of the problem. Who knows what the price of copper is? A deposit the size of Altar, I mean, it's going to be several years before it would even go into production, right? I mean, there's a lot of capital that has to go in. And so that's why having the upper part, that leachable part, and the utilization of Newton technology, if it works, and that's why we're doing the test work, that we can extract not just those minerals that are amenable to traditional leaching, but we can also get the energite and the chalcopyrite. That could be enough of a delta that really has a big knock-on effect to the economics early in the mine life, i.e., so that has implications for payback time, etc. So maybe you start off with a smaller SXEW situation, and then that transitions, and that's the way most of these big porphyries in South America work. They work on that smaller supergene secondary copper blanket that sits at the top, and then they transition into the hypogene or the primary sulfides with a concentrator and flotation and produce a concentrate. With Newton, the beauty is that there's a potential, and again, this is all stuff to be worked out, but there's a potential that we could actually not build a concentrator, and we just leach material and produce. And there's a whole bunch of advantages. There's lower capex. You're producing copper in terms of cathode, so you can actually sell that cathode in country. Argentina is a net importer of copper. So you produce cathode, you're not shipping concentrates overseas, and the Newton technology uses 30% of the water of a concentrator. So these days, just about everywhere in the world, everybody knows water is of an important sensitive issue, and especially in the high Andes, there's a lot of competing,
Demands for that water.
Industries looking for water, and so anywhere we can help to reduce the footprint and use is welcome. And then because of the way the world's going, the carbon footprint is much better than a traditional concentrator as well. So there's a whole bunch of both technical reasons why we're excited, but also from an ESG point of view as well. So we're not hitching our just to add a little bit of a caveat here. We're not hitching ourselves to one wagon here. As part of the PEA, we will be doing trade-off evaluation of a traditional concentrator flotation con, and we'll also be looking at a Newton-only case where we would leach the material. And so that's why this test work is really important. So we get an indication of what we can actually achieve with the ore, and then moving to the PFS. That's why we're planning to accelerate the drilling of large diameter core, which is actually ongoing right now. We have 4 rigs turning, drilling large diameter core in order to get sample to put into large phase 2 10-meter high columns for Newton test work. And I don't think we would be doing that if we saw anything, or more importantly, if Riotinto Newton saw anything in the mineralogy of the ore and the rocks that might be problematic. So part of the $10 million signing bonus, so to speak, that we did in the recent deal with them. One of the requisites of that money is that it was to go to drilling this large diameter core. So that's why we're accelerating that, because we want to get those up and running as quickly as possible and have that information available to us for the PFS.
I've forgotten what my original question, my interrupted question was going to be. But I've got another one. I've got another question for you, which is that PEAs are normally, the simple way that I describe it, kind of a PEA is what a project might be. And a PFS is where you do the most thorough trade-off studies, and you really analyze which route is going to be the preferred route, and then your feasibility, so that becomes what it should be. And then the feasibility study, you tighten everything up and it becomes what it will be.
It's sort of plus or minuses, right? The PEA is kind of plus or minus 25 or 30%. And then with the PFS, you're kind of dialing that down. And then obviously for the feasibility, you want to have that as tight as possible, right? To what you would really do.
The time between now, late November, early December, through to Q2 is actually quite short. So you've got your geological resource, you've got your preliminary metallurgical information. So essentially what you're doing now is populating a study, and that'll be your PEA.
Yeah, one of the real advantages of this project, Merlin, is that because we have a significant amount of the resource in the M&I category, it means that most of that's close to surface, because that's where you have the highest density of drilling. It means that we can move through the PEA pretty quickly. And the other thing that's very important is that we've had analysis done by third-party consultants that are in charge of taking us to the PEA and then the PFS. And, there's a lot of things that maybe many investors don't think about, but there's things like the geotechnical work, environmental work, water balance work, all of those things. From a PEA level study, we're good on all of those fronts. So we don't have to we've got all the data in hand, frankly, to go to a PEA tomorrow. What we're really missing is that phase 1 Newton test work, right? So we could do a concentrator scenario today because we've got all that data. What we're missing is that Newton component, and we want to be able to do that trade-off in the PEA so that people can actually see what the delta of value add is using the Newton technology compared to the traditional concentrate case, right? But like I said, we're not hooking our wagon solely to the Newton technology, but we're excited, and we're trying to show multiple pathways forward, which is I think the responsible thing to do, because one of the criticisms always in our industry is, oh yeah, somebody's found another silver bullet and it's going to solve the world, and then it never pans out, right? And so what I think people need to understand with Newton is that this is not just something that's been developed in the last 2 years. This is the fruits of about 35 years of research within Riotinto, and it's only really in the last 2 years that they've spun out this Newton arm to kind of market and see the application of the technology in a public way, right? So this is not technology that's been just developed in the last couple of years. It's been the fruits of 30 plus years of research and et cetera, and frankly, ongoing research. So
ongoing. And I'm slightly cynical about magic potions and secret sources. And when I look at leach characteristics and leach processes, there's only so much that you can play with. There's kind of chemical activity, there's temperature, and there's pressure. You've got these three kind of overriding physical variables. But I am a believer in kind of incremental gains. And if you've got an SXEW plant and a heap leach which is working with all of the infrastructure and 10 or 15 years of operating history behind it, and the capital is paid off, if you can get a marginal or an incremental gain on your recovery by using advanced leaching techniques, something like Newton, it might be that that's a better way of going than building a new concentrator.
Exactly. And frankly, it's good that you mentioned that, right? I mean, again, we're not talking about a lot of investors are used to like investing in the precious metal space where, the mines are cheaper to build, but they have shorter mine lives, etc. These projects, and that's why there's very, very few junior companies doing what we're doing. These are huge projects. As an analyst told me last year when he visited our project and he saw the thing for the first time standing up on top of the mountain, he says, "You guys are really playing in the big boys sandbox." And he's right, right? I mean, we are. I mean, there's very few juniors that work in this space because it takes a lot of capital to drill them out, et cetera, et cetera. And so, because the deposits are so big, they can withstand lower grades because you're going to have higher volumes, right? And also the an incremental, like you said, change in recovery of 2 or 3% over that volume material has a huge impact on the economics of the project. Everything just gets amplified, right? And so if you can squeeze another 2 or 3% out, that's huge.
Yeah. The phase 2 metallurgy on those 10-meter columns, that's going to take 12 months or 15 months or whatever it is. And that's going to feed into the PFS, which is going to come out in the end of 2026.
2026, correct. Yeah. And probably the way it'll work is that the way that the full, like the 1 meter columns take shorter time, obviously, because they're smaller. The large columns take about from when they start to when they're completely right to the finish is, anywhere, like you said, probably from, I'm guessing here because I'm not an expert in this, but, it could take up to 24 months, right? So that's why we're pushing hard. But having said that, they will know much sooner than that because if you know how leaching works, right?
Yeah,
I mean, most of the copper comes out early and then the last part is kind of incremental gains at the end. And so what we'll probably be doing is they'll have a very good idea. And so we call these interim results, we call them in-flight results. And so those are what would probably get plugged into the PEA and from the small columns and then the PFS for the big columns. And that's been done if people look at other places where Newton's involved, like with Arizona Sonoran, and there's another group, Excelsior. That's what they've done. They've used in-flight results. And so, because by then whether you're extracting or not, right? So.
Well, good. This is the kind of the important and valuable work that you've got to do over the next 12 to 24 months. Kevin, thank you. It's been an absolute pleasure speaking to you again. Good luck with it all, and see you in Canada in conference season.
Yeah, and just thanks again, Merlin, for asking some insightful questions, and hopefully the listeners will have learned something new about all of the technical talk that we've had. And I really like to encourage people to follow us. And, we really, I think, are going to have some exciting news coming out. And I really encourage people to look at some of our past webinars and other things if they want to know more about the project, and check our website out, because a lot of people have seen our share price run up here in the last month or so, and I've missed the train. Well, in fact, you haven't, but the train is starting to leave the station here. So I think there's still plenty of time for people to invest and to hopefully make a good profit here. So I don't necessarily always want to recommend, but I think our group, myself, I'll just speak for myself. I personally have several $1 million of my own money invested in this, and I wouldn't be doing that if I didn't believe in it. So.
Well, congratulations on the work you've done. It's pretty impressive stuff.
Okay. Thank you. Thank you, everybody.